Us now is Dipan Mehta, Director at Elixir Equities. Dipan, hi, good morning. Everyone's going to be watching the impact on Paytm this morning after the RBI restrictions. The management has said that they expect a worst-case impact of 300 to 500 crores on their annual earnings. I wanted your thoughts on this. It's pretty much come as a shock to the entire system, especially the startup ecosystem, right? What do you do as a shareholder in this stock now?
Yeah, good morning, and thank you for having me on your show, Sonia. I think it's very detrimental to minority shareholders, and it raises a lot of corporate governance issues over here as well. And certainly, the trust factor is going to be impacted. So the management may say that their revenue is getting impacted by whatever percentage of whatever crores, but as a Paytm customer, I'm going to think twice about working with Paytm, and that's the real damage. Having watched banks and NBFCs for the past decades or so, trust is the most important factor when it comes to dealing with them. And this certainly is going to be a body blow. I mean, all of us have got money in our wallets, and asking us to withdraw the money from the wallet is akin to, what happened in the Yes Bank, that, you were asked to, your withdrawals were curtailed, and, you were asked to take steps to kind of provide to limit your risk against a bank or an NBFC. So that's not a good news from Paytm shareholders' point of view. And I expect that there'll be a major reaction in the stock price.
Okay, I just want to point out, Dipan, as you point out, for investors, it's a very uncertain time ahead. But for consumers, or rather users of the bank, it's not going to be a big problem. They will be allowed to withdraw, and Paytm, being a payments bank, has to put all its money in T-bills. So I don't think liquidity also will be an issue for them. This, I don't think, is a consumer problem. Of course, they will have to change their FASTag from one to another and things like that. But it's not a loss of money. Whereas if it was a normal commercial bank, you would even worry about who will underwrite the savings.
What Dipan's saying also makes sense. So, for example, right, I use Paytm a lot for a lot of transactions, but now my concern is, what if they move to the next step, and what if my wallet money, the money in my wallet, I mean, it's an additional hassle. So I might as well just download other apps and move to that. That is the fear.
Exactly. That's why the Reserve Bank has given 1 month where you can even load on your wallets. Yeah. But most people will think like you. Why should I load for a month when ultimately I will have to anyway withdraw? So that 1 month is given so that there's no panic. Okay, Dipan, let's move from Paytm to the other stocks. Results-wise, what impressed you overnight? I thought the Shree Cement numbers were good. I thought the Godrej numbers were good. But you tell me, what's your pick of the latest numbers?
Yeah. Good morning, Lata. The pick has to be Sun Pharma. A disclosure, we and our clients are invested in it and pleased with the set of numbers. See, this company has been steadfastly working on its specialty products. There were many doubters that whether it would scale up well and whether it would be profitable or not. But I think they've done a commendable show over there. And I think that gives a lot of confidence to investors that as they pursue this strategy and more products are added to the specialty list, you will have Sun Pharma in a different zone as compared to all the other pharma companies. And it'll be more like an IP-driven type of a company rather than just a pure generics player. So from that point of view, I think it's great news. I like the results very much. And of course, there is a cyclical improvement in the operating profit margins because of lesser competition and better price discipline in US generics. How long that will last, one cannot say, but certainly specialty is becoming a bigger portion of their revenues, and that's great news.
Okay.
Yeah.
The other really strong set of numbers came through from JSPL, right? Big margin beat coming in this time versus expectations, as well as versus what they did last time around. As far as I remember, metals has not interested you much in the past, Dipan, but any thoughts on JSPL? It's already rallied about 20-25% in the last 3 months.
That's right. I think, because we generally like to avoid cyclical businesses because of the volatility in their earnings, but you have to hand it to steel companies, right from Tata Steel, JSW, Jindal Stainless, and Jindal Steel and Power. All of them have reported excellent numbers. And they are in that sweet spot where raw material prices have remained stable, slightly lower, and steel prices also have firmed up. And because of all the spending on real estate infrastructure, they are seeing good volume demand as well. So yes, I think, in a cyclical business, you're going to have some quarters which are going to surprise you on the upside. But, from an investor's perspective, it's always better to buy these businesses when there is stress in the industry and when these companies are reporting losses or flat kind of sharp declines in profits, and then wait for the upcycle. buying a steel stock at an upcycle doesn't usually result in outperformance.
Dipan, hi, morning. Just a few, this is a market which is finding sort of underperformers and bidding them up, right? I mean, for example, Voltas out of the blue, big move yesterday. I looked at something like a Balaji Amines. I mean, has not done anything for a couple of years. Is that the? I mean, it's rotating to try and find newer and newer ideas because there is money and there is momentum. You just need ideas.
That's right, Prashant. But the quality of the ideas also is not that great.
Yeah.
I mean, management can talk up its stock and investors believe it, and you can bid it up. This is the classic bull market, make no mistake. And I'm getting a bit concerned about the way some stock prices have moved up. Valuations clearly are very, very uncomfortable. Good quality businesses are trading easily at 60, 70 times trailing 12-month. And we can see that because of base effect or because of transient issues, the earnings are not growing as much as you would like them to. Like look at Larsen and Toubro, 1-2% lower than what the street is expecting. And that I see across the board that companies are reporting earnings which are slightly below analyst expectations. And it's more to the profits are coming more on account of lower input costs rather than higher volume growth. And how long that can sustain, I don't know. And the valuations are extremely rich. So, you have 2-3 dull quarters and suddenly the investors start thinking whether it's worth paying this much of a valuation premium for such businesses. So I'm a bit cautious. And, it could be the market could scale higher from these levels, but I'm not getting comfort levels to buy at anything at these prices.
Oh, anything? Okay, that's actually answering my next question. See, we are all expecting a capex heavy budget. It's possible, will it be 10% higher than the current year? Current year was 35% higher capex. Now, will it be 10% higher, 20% higher? No, would that make you buy anything? If yes, what?
See, Lata, the way the valuations are for a lot of companies, sure, you could be overweight in some of the engineering construction companies, the road construction companies. But if overall the market view is negative as we have at this point of time, then you rather wait for a correction. And mind you, this is just a kind of, not that the long-term fundamentals are under any threat or the long-term bull market is in any way going to be impacted. It's just that prices have gone a bit ahead of themselves. And this earnings season has not been all that fantastic. There have been many patches, I think. And from that point of view, looking at the valuation, looking at the way, the trading positions are, the leverage positions are in the market, I just want to be a bit cautious. And, it's better to be 15-20% of your portfolio in cash. That's strategic cash. Should there be a correction of 15-20% or so, then that cash should be very valuable to get the outperformance in the next leg of the rally upwards.
Okay.
We put that to Dipan.
Sure.
Can Dipan hear us? I wanted to ask Dipan, this big deal, Viacom18 has purchased Disney India and for all of $3.9 billion. Not as, Prashant was saying, where we started hearing the news at 10 billion. What do you make of it? It's a Wall Street Journal story. The deal is done.
Yeah, I think it's really great news for all of you guys. And, Network 18, TV 18 have been a bit of a, underperformer if you compare last several years' growth. And maybe this is just what is required to, take the stock to higher levels. As shareholders of the company, we really welcome this particular deal. And there are a lot of synergies. See, for a media company, the biggest cost these days is the investment which they make in the content. And that's getting more and more expensive, and it's getting very competitive to find the right talent also. So stronger the balance sheet, the better chances you have of growing the business per se. So I think eventually, all the OTT applications, the channels, you can expect better content. Better content drives higher subscription, higher advertising, and you get into that virtuous circus because you have the revenues to support even more content. And there's fast consolidation happening within the sector, so that also will help improve the yields. And valuations are really at attractive levels. So, I think that both these companies should do exceptionally well on account of this particular M&A activity.
So those are the